Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In today's video, I want to speak about USD CAD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical side of this market. Then we will move to see what is happening from an institutional perspective by looking at the order flow of the commitment of traders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting here on the monthly, what we can see is that we just had the creation of a strong impulse followed by a correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can notice how the market just retraced exactly to the 50% of the Fibonacci taken on this monthly impulse, tested the zone, and now is starting to reject it to the upside. Now, in a situation like this, we could expect more bullish continuation and essentially the market to complete this impulse correction and impulse pattern to the upside. Going down on the weekly time frame, what do we see? Now, here on the weekly, we see two patterns that just completed and one that could potentially complete in the future. We see how we had the creation of this M pattern. After the creation of an M pattern, what we want to see, a move to the upside and completion of the pattern at the neckline. That is exactly what the market did. We had the move to the upside and completion of the pattern. Now, in creating this move to the upside, the market also created this W formation. Again, after the creation of a W, what we like to see, a move to the downside and completion of the pattern at the neckline, which again, is exactly what the market just did. However, in creating this move to the downside, the market also now created a potential impulse correction and impulse pattern to the upside. So the pattern that could potentially complete is this bullish pattern here. We can also notice how since the W formation has been completed, by definition, the neckline of the W is previous weekly resistance, which has now turned support. And we also know that after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse, which gives us a zone that at the moment is exactly here, which is very strong confluence of support. Because here where I have just placed this box, we have the 50% and 0.618 Fibonacci retracements, we have previous weekly resistance turn support, and we have a potential reversal area for this impulse correction and impulse pattern to the upside, creating strong confluence of support here that the market could easily reject higher. Now that we drop down on the daily time frame, we will see even more structure. In fact, from a daily perspective, what we can notice is that in creating this move to the downside, the market is also creating an M pattern. And as I said previously, after the creation of an M pattern, you would like to see a rejection higher and completion of the M pattern at the neckline. Now, I did speak about USD CAD definitely a few times in the past. I spoke about it when we were around this area, explained all the reasons for which we wanted to see this rejection to the downside. Then from here, I made another breakdown explaining why we wanted to see this rejection higher. Then we had the correction here. From this area, I made another breakdown explaining all the reasons for which we wanted to see this impulse correction and impulse pattern to the upside. And after the creation of this M pattern, I made another breakdown explaining all the reasons for which we expected this rejection higher. And by the way, I will link in the description all this previous analysis so you can go and check it out for more free education. However, at the moment, what do we have and where we could be looking for the next potential move here? Now, before we continue with our analysis on the daily time frame, let's first go and see what we have when it comes to this COT data. So the commitment of traders, especially for the CAD. Now, what we can see here is that with the last reports, net positions have been decreased on the CAD, making it weaker. Now, we have to keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the CAD, you're actually already checking CAD USD. And since we are charting here on USD CAD, we simply have to reverse everything that we read here. So since net positions are getting decreased, the CAD is getting weaker, meaning that USD CAD is getting stronger. And that is perfectly aligned with what we have already seen from a technical perspective. We do expect a rejection higher, and we have already noticed how on the weekly, there is the possibility for the completion of this weekly impulse correction and impulse pattern to the upside. So we see here that institutions have been adding a lot of shorts, going overall from 48K to now 66K short positions from an institutional perspective on the CAD, meaning long positions on USD CAD. So institutions are starting to long, increasing the probabilities of this potential rejection higher. And since here on the daily we also have this M pattern, we could definitely expect a potential rejection higher. Now, given that there is good probability for this move to the upside, how we could be approaching it? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that past the testimonials, I'm running currently a huge special promotion in which you have a very big discount on the lifetime access price from 497 euros all the way down to one payment of 97 euros for lifetime access. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard after you joined, you can get a full refund credited back into your trading account. And it's completely optional if you want to join or not. You're not forced. If you scroll lower, you will see that there is still time to join before the timer goes to 0 and the offer expires. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway and price will go back to normal. So I really suggest that you take advantage and join directly from here to gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.